Hey guys, welcome back. So this Monday morning, 15th of December, I was looking at the Bitcoin chart and I see it's now trending below $90,000. Now that's a key psychological level, and a lot of people are rightfully so concerned as to what's going to happen next. And I feel that there is more pain ahead. So, in this video, I'm going to talk about why, despite the Federal Reserve basically going through this process of quantitative tightening all the way from 2022, did not really have an impact on the Bitcoin price, right? So, I'm going to show you there was a stealth QE which was in fact going on. And then I will tell you why this isn't really the announcement by the Federal Reserve that they will start buying treasury bills, and over the span of the next 30 days they will be buying close to what $40 billion worth of treasury bills isn't really the start of the QE that a lot of folks are talking about. And I understand this, right? So I want to start by first highlighting Anthony Pompliano's tweet, where on December 12th, I think this was after the FOMC meeting and the 25 basis points rate cut, that Anthony said that QE starts today, plan accordingly. And so this was on the back of his reasoning is that because the Federal Reserve has announced their plans to purchase treasury bills, and the first batch will be $40 billion, which will be purchased over the next 30 days, and more purchases will follow. He's calling it QE, but Jerome Powell, the Federal Reserve Chairman, he's not calling it quantitative easing. In fact, he is calling it reserve management, right? And basically, what's happening is he's taking the steps to basically ensure that the banking system or the banks have ample reserves available on their desk. So, there is, in the event of a bank run or, the banks requiring capital for overnight repo purchases or interbank settlements, there is enough available on the bank's balance sheet. In any case, you should know that this is money that will be kept on the balance sheet. And what's really happening on this transaction is that is basically, you have of T bills now being transformed into reserves, but it still sits on the Fed's balance sheet, and it really doesn't flow into the economy as people think, because while this does capitalize the bank in one way, this is nothing in comparison to the Fed's balance sheet, or the money required to really pump the economy. You should also know that previously, right, we've seen similar purchases happen even in 2019, but it barely had any impact. And until the Fed really full on, started buying treasury bonds, like long term, long duration, 10-year duration, 20 or 30-year duration bonds in the market, you will not see the interest rate really come down in a way that there is going to be any need for the economy to be pumped up, right? And that's basically what this post is talking about. Another interesting chart is the S&P 500 index. If you look at this chart all the way back from 2020, you will see that this is when the Fed actually started doing quantitative easing, and this was after COVID. And since then, a lot of money was pumped, and all the way from the balance sheet increasing from 4 trillion to I think almost north of 8 trillion. So almost doubled. That's the amount of liquidity that was introduced into the economy, and the stock market followed, right? And after that, despite a brief correction, and since then, we are witnessing since 2020, the mid of 22, we are in this constant quantitative tightening cycle. Yet the S&P has created a new all-time high, right? This is because largely driven by the AI trade, but it's also, and this is very interesting because I was looking at the at the overnight repo reverse repo chart on St. Louis Fed, and when I was looking at this data, I realized that the Fed was sitting at over $2.5 trillion worth of reverse repo on its balance sheet. And this is basically money that the banking system has in excess, and they park it with the Federal Reserve. And the aim is that when they need it, they will basically can withdraw it without any need for for the Federal Reserve to actually cut interest rates, right? So this is exactly what happened. If you look at new liquidity coming in from 2.5 trillion odd dollars, this number has come down all the way from the beginning of January 23 until today, when it's almost nothing, right? It's almost peaked to below $1 trillion. So what's happening to below $1 trillion, right? So what has happened is all of this liquidity has found its way back into the economy, which is what explains why, despite this tightening, there was still a money tap which was opened, which brought in trillions of new capital into the market, which explains this rally. But now, at this juncture right here, when right now the stock market is at an all-time high, and you will see that that the overnight repo is now at almost close to nothing. And this is where things get interesting, because and this also, by the way, explains the need to recapitalize the banking system. And they're starting it first because they don't see the economy in doldrums. And in fact, they said that they're seeing signs that inflation is coming down. Although if you look at data from Trueflation, which is not the indicator that they use, but since April of this year, the inflation number in the US has increased from 1.2 to now 2.7. That's more than double the rate of inflation. But this is not what they look at. They look at the purchase, the PCE index, and the PCE index shows a slightly lower number, which is probably what it's informing them. Also, you should note that even though there is slight inflation fears as the result of the tariffs, there is also unemployment data, and they're extremely concerned because small businesses are seeing month on month decline in net new increase. In fact, they're recording a decline in new people being hired. And that was basically the reason why they decided to do a 25 bips cut. But they didn't really announce a QE. Many people thought that quantitate the end of QT meant the start of QE, but it's really not. This time around, with respect to their policy statement, they have decided that we are going to play, the stock markets is still fine. And in fact, I personally don't think we will see any major long term treasury bond buying activity from the Federal Reserve until we see some kind of a decline uh, in the stock markets. So that's one. But coming back to Bitcoin, it's also interesting. As I explained to you, they started raising interest rates from the mid of 2022, right? Or actually, even before, since July. And since then, we saw a little bit of a correction here. We did see a correction after 2020, after 21 cycle top. But since 22, even though the interest rates has increased, the price of Bitcoin started increasing, and this has happened because of the repo, capital, which basically flew into the market. Another thing that I want you to note today is that 40 billion would really have a little bump on the Fed's balance sheet, right? We're still sitting at 6.5 trillion, and pre 2008 levels, we're sitting at under a trillion. And since then, after the 2008 financial crisis, this number jumped to 2 trillion, and today it is sitting at 6 trillion. So we're already three times the number in after the GFC. And even in peak, just before COVID hit, it was sitting at 4 trillion. So we're still almost 50% higher than that number. A key reason for why I think Bitcoin will have further stress ahead is if you look at if you look at the yes, let me get this chart for you. Yes, if you look at what has happened in the let me just zoom this out for you, and I will remove this for a second. Yes. So if you look at this chart, what this basically shows you is that every cycle from all the way from 2013 till 2025, every post 4 year post halving cycle, we saw a top in Q4, right? A top in Q4, a top in Q4, a top in Q4. So for folks who are saying that this cycle is different, it's really not, right? It's just that we're also witnessing law of diminishing returns, because Bitcoin as an asset has become larger and larger and larger with each cycle, which is why the returns that people were expecting this cycle, like some kind of a parabolic rise of Bitcoin, didn't really happen. Still, we saw a new all-time high, like all previous cycles. So the more people, talk about things being different, the more they are actually the same. So that's a big investing lesson for all of us. Another interesting thing that I was analyzing was the was the midterms. So apparently, when you have a midterm cycle, and what I've done is, if you see these yellow lines that I've put on this chart, 2014 was a midterm year, 2018 was a midterm year, 2022 was a midterm year, and 26 is going to be a midterm year. And in each of these midterm years, we've seen Bitcoin lose in value. In fact, in 2014, Bitcoin lost 75% of its value from all time highs. In 2018, it lost 80% of its value. In 2022, it lost 65% of its value. And in 2026, I'm expecting, because it's a much larger asset, it should at least see a 40% correction. And by the way, this also coincides with the price breaking below the 200-week moving average. Like for each of these cycles, 2013 price dipped below the 200-week moving average. 2018 price dipped below the 200-week moving average. This white line that you see here is the 200-week moving average. 2022 it will dip below the 200-week moving average, and 2026 it so far has already dipped below the 50-week moving average. It has had one candle wick go below 100-week, and I see every reason that we'll see a similar pattern happening in 2026. And this is also something that Ben Cohen has also talked about, and I think I tend to agree with this. So you have two indicators right here. One, that this is a post halving year, and two, the price has definitely had this downward breakout, and that this is a midterm year. And each time in the previous cycles, in midterm years, we've seen the price see a massive drawdown. Now, finally, I want to point out that the reverse repo, dollars, the stealth QE of sorts, which was available and was basically one of the reasons why, despite in a quantitative tightening environment, we saw Bitcoin rallying and we saw the stock markets also rally, is plainly because a lot of this, like trillions of dollars, flew into the markets and into risk assets. But this time around, there is a stated thesis um, by the government, that they basically want to increase, and let me find this chart for you. They basically want to increase their where is it, increase the assets available on yes, this is the one. So this is the U.S. Treasury General Account. Think of it as a checking account that the U.S. government maintains with the Federal Reserve. And so anytime we pay taxes or we buy Treasury bonds from the government, that money goes into the TJ and basically sucks supply out of the economy. And they have now set a target of keeping it close to, like, what, $850 billion for the end of December, and it's currently sitting at $850 billion. So I don't see this number changing anytime soon, which means all of this liquidity is actually sucked out of the system. It's sucked out of the banking industry. So we're not going to see any kind of a price appreciation on Bitcoin, because a lot of money is being held by the government. There is nothing on the repo side. The Fed has announced that they're not going to buy long-term bonds. They're actually buying short-term treasury bills. And because they are buying short-term treasury bills, that money does not find its way into the banking system. Now, finally, I want to quickly highlight that there are 98% odds that Bank of Japan is going to hike their interest rate by 25 bips. And this is an interesting chart shared by Quinton, that every time Bank of Japan has hiked their rates with 25 bips, every time they've hiked their rates before, we've seen a massive correction in the price of Bitcoin, or to the tune of almost 30%. So this is something which could very well happen this time is around as well. So it's a combination of this plus the US Treasury general account increasing, plus there is no money in the repo, plus the treasury bills being bought. Is actually the primary goal of buying those treasury bills is actually to bump up the reserves available with the bank, which will not find its way into the US banking system. Now, finally, this is a very interesting chart shared by the Kubisi letter, which shows that major central banks around the world, right, they're basically still in a tightening phase. They continue to shrink their balance sheets. In fact, the European Central Bank, the Bank of England, and the Bank of Japan together are expected to reduce their balance sheets by $1.2 trillion in 2026. So yes, there is more less liquidity available globally, and that's going to put a challenge to further any kind of an appreciation that we might see on risk on assets, especially crypto, right? So this is where I see. But what does this mean for our portfolio? Now I want to end this talk by basically answering this question. Now, if you see previous historical Bitcoin chart in all of these previous cycles, you would have made the most amount of money if you would have simply started dollar cost averaging at the end of the midterm year. So this was 2020, this was 2014, this was 2018, this was 2022, and this is now going to be 2026. And in each of these phases, you would have got the exact bottom at the end of every midterm election year. So I do feel we will get an opportunity again to start buying in. Right now, if you are holding BTC and if you don't have any need for urgent cash, and your cost basis is below 86,000, which means you bought anywhere around here, it would be a wise decision to sell if you're buying, if your cost basis was above 50K. If it's below 50K, then you can continue to hold on to it, because I don't think it will correct much below 50K. That's the level which also kind of coincides with the 200-day moving average right here, which is about 55K. Actually, it's not 50K, 55K. If you're holding, if your cost basis was around this number, you can continue to hold it. But if it's higher, you could look to basically sell some or all of your Bitcoin and hold cash, and then start buying again as we enter the fourth quarter of this year. I do also finally want to, just before I wrap up, tell you that each of these midterm years have seen a slight bounce in Bitcoin. You saw this in 2018, you saw this in 2014 as well, right here. You saw this in 2022 as well, when the price ranged and was slightly moving above. And in fact, if I look at the 4-hour chart and I zoom in on Bitcoin, you would have seen, right, that the price was in fact trying to create it is moving directionally upwards, right? But I don't think this is going to maintain, because it just broke right here. If I just draw a line right here, you will notice that we have broken this trend, upward trend. And so you might see that bounce back again. It might come back to 92, 93, but then we're going to see a swift correction. So in the end, I want to wrap up this video by telling you guys that I don't think personally we're going to see a massive rise in crypto prices, or especially Bitcoin. And Bitcoin is the front runner. Bitcoin doesn't run, nothing is going to run. So manage your portfolio accordingly, take calculated risks, and wait for an opportune time. And you will get an opportune time somewhere around the end of this around of end of next year, which is when you can start doubling down on your Bitcoin position and ride that rally as we move into the fifth halving cycle. That's it, guys. That's it from today's video. If you enjoyed this video, Don't forget to watch this one where I cover the big opportunity that robotics is going to unpack. In fact, I think that crypto robotics is going to be one of the big bull areas as we move into the next cycle. Anyways, we are seeing massive strides being taken by AI company as we move from LLMs to VLMs and then VLAs, which is basically these multi modalities where all of the devices around us are going to be smart, and a lot of them are going to be powered by crypto economic incentives away from centralized control. So I did some research, found some interesting tokens and projects that are trying to build solutions around that. And if you're interested, you can check it out here. Thank you, guys. I'll see you around.